All right, let's get into it. There's a financial mystery costing Britain billions of pounds every single year.
So why is Britain paying so much more to borrow money? Their costs have skyrocketed, past countries like the US. Just look at this gap. For long-term debt, the UK is paying a massive premium over the US.
Okay, so the first suspect has to be inflation, right? That's the usual culprit for higher borrowing costs.
But nope, the market actually thinks inflation is under control, so that theory is out.
All right, what about suspect number 2? Maybe the Bank of England is just about to hike interest rates.
Wrong again. In fact, the market is betting on rate cuts. This mystery just got a lot weirder.
So if it's not inflation or interest rates, what is it? Turns out it's a two-part problem. Part 1 is something called the Moron premium.
Yep, you heard that right.
Basically, all the political chaos has destroyed trust. Investors now want extra cash to cover that risk. But that's just half of it. The second culprit, the market's actual plumbing, is broken. Check this out. The two biggest buyers of UK debt are now suddenly sellers, both of them. So you've got way too much debt for sale and not enough buyers. That's a huge problem.
So what does this all actually cost you, the taxpayer? Well, the numbers are pretty staggering. We're talking about an extra £7 billion a year by 2030. That's a serious chunk of change.
And here's the craziest part. The UK actually has less debt than its peers, but it's paying more. But there is some good news. This is a solvable problem. There is actually an escape plan. It's basically a 3-step fix. Change what the Bank of England and government are doing, and just be boring. At the end of the day, the government just needs to look competent and stable. That's the real job here. So, could boring policy really save taxpayers billions? You bet. Turns out, perception isn't cheap.